Good morning and welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to be pulling up some live rates and then we're going to be doing a deep dive into our favorite loan type, which is DSCR loans. So we'll wait just a minute here to go live on all the different platforms. We put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. You can also ask any questions that you have in the chat as we go through the deep dive here when we go into our in-depth breakdown of DSCR loans, which again are our favorite product here at the Mortgage Calculator. So we're excited to talk about those. For those of you just jumping on, please drop a comment there in the chat. We appreciate it. I see people tuning in nice and early. And we'll get started here in just a moment. All right, some comments keep coming in. Appreciate that. And it looks like we are live on all the different platforms, so we'll go ahead and get started. What we'll do is we will take the chat off the screen, but please keep dropping comments there in the chat, and you can drop any questions that you have as well. But we'll take the chat off the screen for now. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender and we specialize in non-QM loans. And what we do on this show every morning is go through some live mortgage rates for different programs. And then we do a deep dive into a different topic every day. Today's deep dive is going to be DSCR loans, which is our favorite type of loan here at the Mortgage Calculator. So we'll go through some live rates, see what they're looking like, and then our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, is going to do a deep dive into DSCR loans. So with that being said, Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like this morning for our different products there.
All right, and again, looks like some good news for mortgage rates coming through, so hopefully we see that reflected. Let me change my screen, and we will check out some live action here. So this is our pricing tool, as Kyle had mentioned, for our team of mortgage professionals. This will show us the general rates and the APR for today. It is December 6th, just after 11 a.m. Eastern, so all of our general programs are live. As I mentioned, the news is good, so hopefully we see some favorable adjustments here, and we will definitely should see some downward momentum throughout the day. If you'd like a full breakdown, a full itemized loan estimate of all of the itemized fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states. For the demos, as we do every day, we'll set up a general scenario so we can compare across the programs. We'll set a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. And we're going to have the computer look for the absolute lowest rates we can offer for conforming conventional. Then we'll check out FHA. Then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional options. VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. Not everybody is, so we don't do that live. And same with USDA, that's only for eligible properties. If you do happen to be looking in one of those areas, just let us know. We can quote it, but not everybody is. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 here, and an estimated debt-to-income ratio of 40. So with these basic settings, let's check out the conventional options this morning. Looks about the same as yesterday. Hopefully we see some changes later this afternoon. 6.5 rate, 2.5 discount points and cost, 6.8 APR. So we love to see that go down. We were approaching almost 8 just not too long ago, almost just about a month ago, and now we're all the way down under 7, which is great. So definitely good news for all of our shoppers out there still looking for properties. The rates are definitely moving in our favor. Now, if for any reason our customer doesn't qualify for conventional, we'll set up the same scenario, and typically the next option we want to look at is an FHA program. FHA does allow a little more leniency on credit issues, as well as a much higher debt-to-income ratio. However, we'll keep everything exactly the same so we can compare APRs, apples to apples, across the programs here. So let's check out the FHA options. All right, good option at the top here, 5.625 rate, 2.5 discount points in cost, puts the final APR 6.570. So just a touch cheaper than conventional here if our customer qualifies for both. So definitely don't overlook the FHA option if you do qualify conventional. But definitely some good movement again in FHA rates for all of our customers out there shopping. Finally, some downward momentum. Now, if our customer unfortunately doesn't qualify for FHA or conventional, unfortunately, many other banks or lenders would have to deny that customer. But that's where we love to specialize here. At the Mortgage Calculator, we have over 5,000 other loan programs under expanded guidelines that most banks or lenders do not have. This is also known as non-QM, where we can use alternative income. So under these programs, we have a new option become available where we can select different income. Full doc is what we use for conventional and FHA. That means 2 years of tax returns. So we would choose typically one of these other options if we don't qualify with our tax returns. So we have our asset-related programs, business bank statement programs. The investor DSCR programs are only for investment homes. So we'll talk about that in a minute, and that's the topic for today's show. Personal bank statement 12-month is the most popular. That's what we use here for our demo. We also have RSU, stated income, VOE, 1099, P&L, no income CDFI. And please watch some of the past episodes where we go through all those different options. For the live demo, we always use our most popular non-QM program, the 12-month bank statement. And that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may not qualify at all, or just may need a little bit of extra income. So we can solve that problem, no tax returns at all, just their last 12 bank statements. And then we'll determine a debt-to-income ratio of 40% in this example, using just the cash in the bank, no tax returns at all, and can therefore typically qualify for much more income and get the home they really want. So let's check out the bank statement options this morning. All right, best option at the top here, 7.625 rate, 2.375 discount points and cost, puts the final APR 8.053. So using bank statements, obviously non-QM, a little bit more expensive typically. We were beating conventional for a minute there, but this is more typical. It's a little bit more cost here to use bank statements, but it does solve our problems for our borrowers. Not only can we solve the income problems, some of these options here at higher rates and costs may also allow credit issues such as bankruptcies and foreclosures that would otherwise cause our borrowers to not qualify. And some of these can use different means of calculating income. So hundreds of different options here. Please get with our team to find the best options for you. And now, before we go into Jose's deep dive example, we always do live pricing for investments. Obviously, Jose is going to have some more detailed work here. But for the demo, we always want to compare our general pricing for investment properties using ADLTV, 20% down payment, just as before. And as before, we're going to find the lowest priced options for our conforming conventional and our non-QM expanded guideline options. Government programs, FHA, VA, USDA, do not work for investments, so we'll just compare these two here. We'll start with conforming conventional. Everything else is going to stay the same as all our other demos. So let's check out the conventional options for investments. All right, best option at the top here, 7.124 rate, 3.25 discount points in cost, final APR 7.521. So good option here for our customers that qualify conventional. This was very expensive previously, but this is a good option for our customers that would like to use full documentation and can qualify. But we always want to make sure our customers also check out our non-QM options. So for the final live pricing, we'll set up investment property again. The same scenario, 80% loan, 20% down payment. And this time we'll check out our non-QM expanded guideline options. So the first thing we need to select is our income type. Most popular income type for investment properties, and our most popular loan by far, and our topic for today, the DSCR option. That's because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA, the expenses of the mortgage, aka the property cash flows. That's a ratio of 1.0 or higher. We even have options for under 1.0. I'm sure Jose will probably go into those here in a little bit. But for the demo, we always put 1.5. That's the highest value the computer accepts, so we can see all the programs pop up. And finally, a prepayment penalty must be selected. We always use 3 years as the standard here, so we can see the most options. We could select 0, that will cost more and limit what shows up. We could also select 5 years, which does save some money, but not all programs allow. To show the most options here, we always select 3 years. So let's check out the DSCR rates this morning. Wow. Almost beating conventional here, 7.375 for 3.25 discount points at cost, puts the final APR at 7.889. So absolutely smoking rates there on the DSCR. Very comparable to conventional. Usually it's much higher. We've beaten conventional for the last couple weeks when rates were crazy. But this is absolutely an amazing program right here that is nearly identical to conventional. I'd say 100% of investors, when looking side by side with conventional at 7.6, I believe it was, APR, and DSCR 7.8, the 0.2 difference is absolutely negligible here. You would definitely go with a DSCR option for the flexibility. And there are dozens, if not hundreds, of variations here. Some of these at higher rates and costs, again, may allow bankruptcies, foreclosures. Some may allow alternative rental calculations, such as short-term rental income, very popular request that we get. And some of these may allow alternative property types as well. So hopefully Jose will have some detailed examples on the variations under the DSCR program, because that is our topic for today. So let me go ahead and change my screen here. And we'll let Jose start talking about DSCR loans. Definitely our most popular loan by far. Definitely our most flexible loan by far. There are so many variations. We try to do episodes on all of them, but it's really an exhaustive program. There's hundreds of different variations, 40-year interest only variations. We can add all kinds of different prepayment options. There is a ton of options once our investors get into these programs, where we can mix and match to make it work for exactly what they need. Short-term rental income, rural properties, all kinds of different things that we have the ability to put together. So, Jose, I'm sure you got a couple cool examples, so I'll go ahead and pass it over to you.
Good morning, everybody. Thank you for joining us in this very exciting daily rates live with the mortgage calculator. Always amazing when we have good news. The 10-year is dropping like a rock, and we are seeing the benefits out of it. Now, obviously, today's show's only half an hour, so we can't go into all of the variations that we can do with DSCR, which is such an amazing program, like Nick was mentioning. We can use the DSCR for all types of non-conforming type uses, short-term rentals, less than properties that aren't cash flowing at a 1.0, right? We can do properties cash flowing technically all the way down to 0, right? So 4-unit properties, we can do them at the same LTV as a 1-unit property, except for the 15% down option, which is limited to 1-unit properties only. But on most DSCR options, 1 to 4-unit properties, when the DSCR is 1.0 or above, for sure, 1 to 4-unit are the same pricing. So let me get into some examples here for you, because I do have quite a few. So our first example here is our DSCR unicorn, like I like to call it, our 1-unit purchase with only 15% down. Now, this is available only for 1-unit properties. This is not an option for 2 to 4-unit properties. And believe it or not, the best pricing is available with the 3-year prepayment option, because when we add the 5-year prepayment option, this favorable priced conduit is eliminated. So, which actually has better pricing than the 5-year option. So here we're looking at 10.875, which is almost at par, but with a nice deep rate sheet and not a lot of cost for each eighth of a point drop, eighth of a percent drop, you can take it down all the way to 9.25%, which is very low and amazing for a 15% down DSCR option. Obviously, the catch is it has to cash flow. This is not a less than 1.0 option. So very little catches here. 1 unit and above 1.0, but great option for your investors. That way they can buy 2 properties instead of 1. Here is another. Now we're going with 20% down, which is the more traditional, if there's anything traditional about a DSCR loan, the more traditional option. But you can see how the rates get smoking at 20% down. 8.5% actually has a lender credit. Remember, this is a DSCR loan we're talking about here now at an 80% LTV. And you can buy that down all the way to 7.375%. Now, I added a 5-year prepay to this option, so we do get a little bit of an improvement here now. You see it drops the rate by 0.375, which is pretty good for adding the extra 2 years on there, and you can buy that down all the way to 7.125. So this is one way, obviously, to help your DSCR if you're trying to make it to the 1.0, so you can offer the borrower the better rate. Just go with the 5-year prepay, or trying to work the points and fees in a compliant manner. Just add the 5-year prepay, and the pricing, for example, here at 8%, it's 1.25. Here at 8%, it's 0.25. So it's a full 1 point in cost swing betterment by adding the 5-year instead of the 3-year prepay. And then for our house hackers out there, we do have, I just wanted to show you so you can see with your own eyes that the rate is the same. Now, this is the 3-year prepay. The rate is the same, exactly the same for the 4 unit as the 1 unit when we are at our more quote unquote traditional LTVs for a DSCR. So now dropping the LTV a little bit more, just so that you can see. And now this is with a 5-year as well. So you can see now 8% has a lender credit of 0.225. And you can buy that down to 7.125. And it does better the cost by a little bit there. Now here's where it gets interesting. Our less than 1.0 DSCR. Now, keep in mind that the DSCRs, depending on which option that we pick, there are short-term rental capabilities, right? Where you can use AirDNA, you can use short-term rental revenue reports, usually require 12 months, but we have options, I believe, where if you have less than 12 months, they will consider it on the short-term rental revenue report. So if it's a purchase, the seller is doing short-term rental of the property and they are willing to share the revenue reports, which there's no reason why they shouldn't, right? Because that's going to help them sell their property. You can do it on a refi as well. You cannot use AirDNA, obviously, on a refi. You have to use actual data. So here, for our 0.75 to 0.99 1 unit purchase with 25% down and a 3-year prepay, remember, we're not cash flowing here. We can still do 9.25 with a lender credit, and you can buy that down to 8.125. So very good option. Now we have this is the one that really blows your mind, our less than 0.75. Now, these no ratio options, a 0.75 to 0.99 and less than 0.75, are also very good to use for those trophy properties. It's going to be a short-term rental. You don't have any Air DNA comps. You don't have short-term rental revenue reports, but you do have your own data, and you know you're going to kill it. You just got to close on it. Well, this is the one to make it happen right here. 25% down is all it takes. No ratio, and 9.875 is your lowest cost option, and you can buy that down to 9.5%. And now we have our 1 unit cash out, 75% LTV. And we have 8.5% with a little bit of a lender credit. And you can buy that down to 7.5%. This is our over 1.0 DSCR. Now, on the cash out, this is a very interesting anomaly here. Just want to make you guys aware of it, that the 0.75 to 0.99 option is the same maximum LTV, whether it's a purchase, rate and term, or cash out. 75% LTV is possible on a DSCR cash out, 0.75 to 0.99. This option with a 3-year prepay, 5-year prepay is available, is possible. So here, 10.125 is par, but look at how deep that rate sheet goes, all the way to 7.99%. So definitely benefit there. And last but not least, our DSCR less than 0.75 cash out does allow up to a 70% LTV on that option. And we have 10.375 is almost at par. And you can buy that down to 8.25%. So again, remember, our DSCR options are the best choice for your short-term rental properties, your trophy properties, the investor that doesn't want to disclose any of their private information, just DSCR, and you would just qualify the borrower off of the property's cash flow.
All right. So you can see there why that's our favorite loan program. Absolutely amazing products there. But I don't see any questions. So I think we can wrap this up. Remember, we do this 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we'll be back. We'll be back tomorrow with a new topic. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Get out there and requote those deals. Loan applications are up 14%, people.
Absolutely.
Thanks, everybody.